Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark comments on the downturn on just about every market on Friday. Is this the end of risk on? Trends Journal publisher Gerald Celente talks about three factors that could see the end of rising stock markets and what trends he sees for 2018. Inc. Research CEO Ted Dixon tells us why he thinks Canada's stock markets have been losing value in the new year while the U.S. markets have been climbing. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, CEO of Chartworks.ca. Welcome back to the show, Ross.
This was one exciting week, if there ever was. We've been having this run of risk on for months now. Actually, if you go all the way back to the U.S. election, it's been pretty much since then. Everything getting overextended in the last few weeks. We had that major upside target on the Dow, 26,700. That was the retracement rally off of the 2009 bottom. I mean, the target came within 90 points after a 20,000-point move. So this is an exceptionally good target. It was a point at which to then expect to see volatility in the market becoming capped. In the S&P, we've seen the market top within the next 2 weeks, every single time that's happened since the spider started trading in the 1990s. So vulnerability was set. All you need was a catalyst, and Friday was the day where things came unglued and was a 2.5% day down in the broad indices. We should have some follow-through. We've got some nice targets on the downside that we're looking at. We're seeing the Bitcoin stocks, the blockchains, all down. The marijuana stocks, where the risk on had been, getting big sales, getting close to important support levels there. So I'm really looking forward to the next month or so because we haven't had any good bargains recently. And for subscribers of the institutional advisors, we're offering the opportunity for new subscribers to come on board, $50 trial for the next 2 months. And they can find us at chartworks.ca, and hopefully between those markets and the precious metals, there will be some good trades available to any of the listeners.
Was Friday a coincidental bump where so many things went down at once, or could this be the warning sign that a correction is about to go underway? Well,
it's ideal. Actually, a correction has been overdue. It's a good spot. When you've had this much momentum on the upside, you will typically correct and make lower monthly lows. We mentioned this for 1 or 2 months. Usually it's 1 month of down hard. The next month has a marginally lower low and then makes a turn. But the odds are that this is a short-lived correction for now. You rally back maybe after we get through March into the early spring. The key is going to be, does it create a rolling top, or do we get a new leg to the upside? Because indices as a whole tend to create rolling tops, whereas individual stocks can create a big spike. What I'm going to be watching for is the rally that comes out of the current break that we're having. So we're going to take them one step at a time, not try and make a major call here for a major top. I think this is, for now, a scary moment for people who have been in recently, But for anyone who has cash on the sidelines, whether it's a broad index or individual stocks, there are going to be some really nice opportunities here.
Some March Madness.
Yes, the Ides of March may end up being a nice opportunity.
Could one of the reasons why Bitcoin and other cryptocurrencies went down is they're now listed on the Chicago Mercantile Exchange, which means hedge funds might be trying to short them?
Well, and also by the time you get around to listings on various exchanges or products are brought to market, it's typical that is just a benchmark along the way for products to be at excesses. And you see this so many times. So the ability for short sellers is good, but you have to remember, too, that in a hard-breaking market, you want people to be short because they become the buyers on that hard break. They're the ones who aren't worried about whether it's going to drop another 5 or 10%. They're actually looking to take some money off. And the highs that we've seen in these blockchain and Bitcoin products, you know, they were the classic bubble and the first bounce off, the first oversold. We talked about this. It was a classic short sale. I've got 10 other examples that we've put out in the presentations to show people just how this was the norm. And what's important now is how this break now unfolds, because this could become like the biotechs of 2 years ago and base out, or like the marijuana stocks of spring of 2017. Big hard correction, a new base, and go. Or it becomes like the dot-coms of 2000, where you were rode away for 2 years. So we'll watch the characteristics during this break. I don't think blockchain's gone. In terms of the longevity, there's something there that we're going to be using for years into the future. But how it gets there is another story.
Ross, thank you so much.
You're welcome, Jim.
We've been speaking with Ross Clark, CEO of Chartworks.ca. Coming up, Trends Journal publisher Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Always great being on with you, Jim.
Did you happen to catch President Trump's first State of the Union address?
Yeah, I did. It was very difficult to watch all of it, though. I couldn't keep going through it. But yeah, I did. And it was quite militaristic. Some of the comments were, it's keeping that we're the exceptional country going routine. And you listen to the words that he says, no people more fearless. What do you mean no people more fearless than America? What What, because we're in all these wars that makes you fearless? So, it talks about the the tax cuts and how it's helping people. Yeah, the tax cuts are helping the very rich. I mean, look at the numbers. That's all I'm interested in. The average person, average middle-class family gets the grand total of about $900 in tax breaks, while Trump gave himself and all the owners, the plantation owners, all the big breaks. They don't have a state tax anymore. That's going to be running out. They raised the level in the meantime, and it only helps a couple of 100,000 people. And these big tax breaks that they got for corporations, they're going to create jobs. They're going to take the money and put it back into stock buybacks like they did before. When Bush did the whole routine about repatriating the money that they're hiding overseas back in 2004. 96% of it went into stock buybacks. So, it was more of the same, and I've come to realize that when you look at Trump's record throughout his life, everything he's ever done is to help himself. And that's all that they're doing with this government. It's to enrich the rich that already have in the United States. 3 people have more money. Gates, Bezos, and Warren Buffett have more money than 60% of Americans combined.
What is the real State of the Union?
Again, it's a gap between the rich and the poor, the pennies for the plantation workers. And it's better than it's Slavelandia. It's better than a plantation because you don't have to house them, you don't have to clothe them, you don't have to feed them. You give them just a couple of bucks so they can leave. They can leave the cotton fields after they finish work, like Amazon or any of the other Walmarts or the Targets or all the other so-called multinationals. So it's the people. Again, you look at the numbers. 78% of Americans are living paycheck to paycheck. That's the State of the Union, and the State of the Union is in denial and it's divisive. You got the Democrats complaining about Trump for the same thing that the Democrats were doing under Obama and under Clinton, as if the Republicans are doing now. So people just don't want to admit that their freak is different than your freak. My freak is better than your freak. That's the story in America. The truth is off the radar. Nobody wants to look at it. Turn on the TV. They talk about identity politics, the things that you like to watch, that you're supporting, whether it's bullying kids in school or gay rights or immigration issues. It's identity politics. It's identity news. People go to these stupid prostitute news channels to hear what they want to hear. And that's why we're so successful, because the Trends Journal, it's not about what you like, what you want, or what you wish for. It's what is.
The so-called FISA memo was released today. Is that Donald Trump draining the swamp?
No, not really. And again, there's something that the Democrats are complaining about. Why shouldn't we know everything that they're doing? Oh, it's going to hurt our national security. I've been hearing that line all my life. It's a lot of baloney. No, it's great that they released them. They should release much more. Why shouldn't we know what's going on? Why does it have to hide from us? What makes them so special? The government, they treat us like we're a bunch of little kids. Oh, we can't see the raw intelligence. This is the terrorists are going to see it, and then they're going to, stop with this baloney. What have you guys ever done of any consequence that's really helped anybody? So this is against the Constitution, but nobody really cares about that anymore. All they keep saying is that they're going to, they're doing it to protect us. Who could trust the FBI? Go back to J. Edgar Hoover. Anytime there's a peace demonstration or anything, they're infiltrating. NSA, spying on us all the time. So anyway, it's just more of the same, different game, but I'm glad they released it, and I hope something good comes out of it.
Do you think Donald Trump is actually draining the swamp?
No. Look who he has in the White House. Look who's the Treasury Secretary, Mnuchin, Goldman Sachs cat. Cohen, Goldman Sachs. Draining the swamp? He filled the swamp up with generals. The Eisenhower would be turning in his grave. 5-star general, Supreme Commander of the Allied Forces, 2-term Republican president, who warned us as he's leaving office that the military-industrial complex is robbing the nation of the genius of scientists, sweat of the labors, and future of children. And Trump puts in 3 guys in there, 3 generals, Mattis, Kelly, and McMaster, draining the swamp. He's filled it.
Do you think the stock market is going to continue under Donald Trump?
Yes. There's 3 things. We've been saying this. We were the first magazine to come out, and you know me, I've been on a long time, that I was very, very pessimistic about where the markets were going. When Trump got elected, I said, no, the markets are going to go up. We wrote about it. For basic reasons, they're going to enrich the corporations and more stock buybacks and giving them more money, and that's good for the markets. Not good for necessarily for the people, being that 10% of all the stocks are owned by 10% of the population owns 90% of the stocks, and on an average about $350,000. The rest that's owned by the average person, the other 10%, is of the stocks that are owned by the rest of the society. They only have about 15,000. So the markets are going to be good, but we've been saying from the beginning, 3 things will kill the market rally. 1, higher interest rates if they go too high too fast, because it was cheap money that built the markets. Again, now everybody admits it, but when we said it in the beginning, nobody wanted to believe it. Number 2, inflation. Because as inflation goes higher, interest rates go higher. And number 3, geopolitical unrest. So all 3 of those are in the making. If there's a crisis in the Middle East, which the Trump administration, Israel, and Saudi Arabia are pushing for against Iran, say goodbye to the markets and say hello to gold.
What do you think the average person should be doing right now with that in mind?
Well, again, I don't give financial advice. Speaking only for myself, you know, I've been very heavy in gold for a lot of years. And when you see also, very important, you know, the old stories about 1929, how the shoeshine boy was giving tax advice. Well, now you're seeing with Ameritrade and these other ones going 24-hour, doing, you know, day trading. When the average person starts bailing into the markets, you know that that's a warning sign, and that's what's going on. So, you know, to us, as we're looking at it now, we don't see this at this moment as we've been saying, I mean, since about, I'm trying to think about the exact date, March of last year, we said there's going to be a 10% correction in this market. You know, and it just keeps going up. So there'll be a correction. We don't see a crash at this time. So I think what you're going to start seeing is, then you watch the markets, and you know, the trend is your friend, and you're going to start seeing a lot of cash on the sidelines. So this to us is a time, you know, again, we're not market players, but this is a time for us to sit back and watch and wait.
Cryptocurrencies have been the craze, and then in the last few weeks we've seen them fall 50% or more. Were they a classic bubble and classic speculation gone mad?
No. What it was is we saw it, in the beginning I was very hesitant about the cryptocurrencies because we said the governments are going to regulate them. And I became more positive on them, and the prices started going up and there was no regulation. And now all you're hearing about is regulation, whether it's coming out of South Korea. They keep going back and forth, changing the story. India just came out this week saying that they're not going to allow it. China stopped it, and Australia and other nations. EU is talking about it. So to us, it's a government play. If the government doesn't want it to happen and stops it from happening, the cryptos are going to go down, except the ones where they have a purpose. So, for example, if you invest, let's say, in Microsoft or Oracle, you know, they're selling a service, they're selling a solution, they're selling a product. So instead of getting a stock, you're going to get tokens, and that's what we see happening in some of these cryptocurrency trades, these ICOs, where they're providing a blockchain technology that's being used by agriculture or banking, those kind of things. Those will probably continue to grow. The Bitcoin, that's more of a populist coin, where people want to get away from fiat currencies, not go into gold, and have an alternative, that's going to be under pressure as long as governments put it under pressure. But we don't see cryptocurrencies in themselves dying and going away, if they have a purpose.
Interest rates are in an uptrend. Could they spike higher?
Absolutely, and that's what's bringing the markets into correction territory, because it's only been cheap money that's boosted the markets. And it's very important to understand as well, this tax breaks that Trump has given a lot of these corporations, they're going to be buying back stock. So if corporate profits stay decent and the tax breaks they've gone through, you're just going to see more stock buybacks. But if it gets too hot, the economy grows too quick, inflation starts rising, that's what the fear is, that interest rates start spiking. And you're going to see inverse interest rate. You'll see short-term rates being higher than long-term.
Are higher interest rates and tightening credit likely to affect the real estate market?
Absolutely. It'll affect everything. And you're going to start seeing slowdowns in new mortgage applications. And again, it's the people are stretching themselves already because so many people are just living hand to mouth. So if interest rates go up too high, poof, you're already seeing it, by the way. You're seeing rents in New York City, for example, retail rents, they're down 18% from their high. They've fallen. So yeah, and the fish rots from the head down. So you look what's going on at the top, and New York is one of the top markets. You see rents going down there. You can see what's going to start happening. First it hits the luxury, and then it seeps down to the lower.
Is the average consumer drowning in debt?
Well, look at the numbers. Credit card debt now is an all-time high. Now you're going to start seeing a slowdown in the auto industry. Again, as rates go up, and the subprime autos like the subprime housing. Of course, the numbers aren't as big, but you're going to start seeing a lot of losses in that field as well. Now, the consumers, again, 78% of the consumers in America, people working full-time, are living paycheck to paycheck. And, by the way, look at the savings rate. It's down to, a couple of percent. So there's no backup.
Is the reason people aren't saving is there's no interest to be made on savings?
That's part of it. But you go back to 2010, you sort of, when people were bailing out of the stock markets and afraid to spend, savings rates went up even though interest rates were really low. So interest rates are part of it. The other part of it, of course, is like you said, it's a war against savers. And that's what they did. They lowered interest rates, negative zero interest rate policy, quantitative easing to boost the markets. That's all this economy is about, is making the rich richer, the big bigger, and it hurts everybody else. They become poorer.
We'll have more with Gerald Celente when This Week in Money returns.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. Gerald, what do you think is going to be the big trend in 2018?
Oh, there are a lot of them. You know, the biggest one that we're concerned about is war. And even, you know, we came out, it was one of our top trends for 2018. And 2 months later, of all places, The Economist came out warning as well of a major war brewing. That's the major issue. And we don't think it's going to be with North Korea. And I've mentioned this before, I believe, on your show, because if the United States attacks North Korea, say goodbye to South Korea. You know, Seoul, South Korea has 4 million people in the metropolitan area. It's only 35 miles from the DMZ. So we don't see anything happening there, but we're concerned about what's going on with Iran, the hatred that the United States, Saudi Arabia, and Israel are building up their people in the countries to go after Iran. And that to us is that's the big one. And of course, what happens with NAFTA on the economic end, what goes on with these trade agreements. So those are the two big ones that we're concerned about the most. And again, as an American, it's not what I like, what I wish, what I hope for, but, you know, telling you personally and from the facts that these trade agreements have not helped the people, because you look at the decline in our standard of living since NAFTA came into place, how many jobs that were lost and the kind of jobs that are being created now. It's not been a net benefit other than for the big corporations.
Is inflation picking up, and could that be good for the gold market?
It will be good for the gold market if it spikes, but it won't be good for the gold market if it's just short-term interest rate rises. So in other words, if interest rates go up just a little bit and to stop inflation, that's going to hurt gold because the dollar will get stronger. Inflation has to spike for gold to get strong. And again, I've been saying this over and over and over. The stronger the dollar gets, the weaker gold gets, because there's an opportunity cost in holding gold, and commodities are priced in dollars, whether it's oil, gold, copper, iron, or you name it. So the higher the dollar goes, it takes more money to buy all these other commodities. So when inflation goes up and the dollar goes up, then gold goes down. Inflation has to get out of hand, and then when that happens, that's when you're going to see gold spike. And I've been saying this for 4 years. Gold has to break strongly over the 1450 mark. It has not done that in 4 years. Then it will spike to 2,000 plus. The downside risk of gold we see, and I've been saying this for 4 years, is around 1150, 1050. That's it. That's not a big downside risk when you're only in 1340 range.
If the U.S. dollar continues to weaken, is this a good indicator for gold, silver, and commodities?
Absolutely. Again, the weaker the dollar, the stronger goes gold. And, you know, interestingly enough, you're seeing the Chinese yuan gain strength, the dollar going down, and also going back to what caused the markets to rise in the beginning following the panic of '08, cheap money. So now what you're looking at, for example, when you go and take a look at what's going on in Europe with the strength of the euro. So the stronger the euro goes, for example, then the stronger gold goes because the dollar weakens. So the dollar was, for example, this past week, the dollar was boosted following the solid U.S. jobs report. The dollar went up, gold went down. And again, it depends on how strong the dollar gets. The weaker the dollar, the better for gold.
Canada's Prime Minister Justin Trudeau seems to be ignoring the Trump revolution in the States. Is that likely to cause economic pain for Canada?
The economic pain from Canada is going to come from the NAFTA, and whether or not the United States bails out of it. And by the way, Trump does not need Congress's approval to end NAFTA. Just has to take a couple of steps to do in the legal sense of making different statements at different times and signing different papers to start the end of it, but he doesn't need approval from Congress to do it. Of course it's going to hurt. Trade with the United States is very important to Canada. And again, but we're looking, though, also at a global economy. And overall, the global economy has been relatively strong. The best it's been in a number of years. So again, even though the markets, this week were under pressure, not only in the United States, but in Europe and in Asia, we see it as, we don't believe, and again, it could be wrong, we don't believe this is the beginning of a meltdown, where we've been saying it's going to have a 10% correction. It has to. And the markets have gone up very strongly. So the market plunge that you're seeing, it has been expected, and again, we've been saying not everything goes up. Things go up and down, and this is just, it's a time for it to go down. But again, if it keeps going down, and then there's a geopolitical or a wild card event thrown into us, then head for the hills and go into the gold mines, because that's when it's going to spike. The worse the markets do, the better it's going to be for gold.
As manufacturing returns to the U.S., are China, Mexico, and Canada likely to feel the effects?
Mexico will. China to a smaller extent, because their trade deficit is so huge with us. But China is also building and planning to move in new directions. That's why they're doing so much with their Belt and Road Initiative, going through parts of Africa, Eurasia, Europe. And so China understands that they're going to be slowing down in trade with the United States, but they're looking for other places. And by the way, follow China. We've been writing a lot about this. Our New Trends Journal will be out shortly. Go back to China and remember when it began to open up. All of a sudden you saw the Yum, the McDonald's and the cheaper fast food joints going in there. And then that they didn't do so great after a while. And what's going well now in China? Higher end products, luxury market. You have go back to talking about the World Trade Organization when they joined in 2001. By the way, 2 weeks after 9/11, when no one was watching. In other words, they weren't making an issue of it, trying to get them in there. And 5% of the Chinese population was middle class. Today, 35% is. So if you're going to be in business and you're looking for on-trend opportunities, China is just going to continue to grow. It's a country of 1.3 billion people, and their focus is on making money. America's focus is on war. So rather than them wasting their money and their trillions on war, they're going to keep investing. They're going to do everything they can to keep their economy growing, particularly doing more internally and relying less on exports, because they know the export market's going to change on them, so they're going to build the market that will import less and produce more there.
Are we likely to see civil unrest or even maybe a civil war in the U.S. under the Trump administration?
No, I don't think so. You don't really have a fighting nation here. They hit the streets one day and then they go home. And so the identity politics I was talking about, everybody is so scattered into what they're interested in, rather than a broader view. And again, what has Trump done that the others haven't done? I mean, Trump just gave the wealthy a big break. Well, didn't Obama do that and Bush with too big to fail? You know, so what's the difference? Oh, Obama's ramped up the war. How about Obama when he brought 33,000 more troops into Afghanistan? But everybody forgets that. Oh, Trump is still in Syria. How about Obama that started the war in Syria and started the one in Libya, along with the other murderers like Cameron and Sarkozy and others? So there's no unified movement. And again, it's only the Democrats that are going up against him because they're not in doing their dirty deeds and they want to get him out. But we don't see it happening. But again, a lot depends also on the midterm elections, what goes on. And because Trump's tax deal really, really helped the rich and not the average person, that may be a negative, and the Republicans may lose seats. But we don't see a revolution. No, not at all.
Is the fight against political corruption likely to become a worldwide trend?
The populist movements are the fight against it, and it's going on everywhere, and the corruption continues everywhere. Name the country, and you could talk about corruption. It's the human spirit, and that's what there's two words missing, or three, as I say: morality, dignity, and integrity. You know, look at the wars going on. You got to look at Canada. You're a war hawk nation as well. Every time the United States goes to war, Canada's tramping behind them. Bombs away. So if you're going to murder millions of people, what are you talking about corruption? It's a secondary issue. It's part of immorality. And immorality, again, the fish rots from the head down. So if the governments are doing this, why shouldn't they go on continually? And it goes down to the population. If the government's cheating and killing, why shouldn't I? What makes them so special? So until the morality and integrity changes, we don't see anything changing.
Could Bitcoin have been created to take money out of the Chinese economy?
I don't believe so. I think Bitcoin was done for the reason it was, because the Chinese stop money from flowing out of the economy anytime they want, and the capital outflows as they did in 2016. This year there hardly anything in 2017, and last year in 2017 I think there was only like 60 billion, and it's going lower. So no, the Chinese government's in total control.
What's new with Occupy Peace, Gerald?
Well, it's very difficult. You know, I was on with Ron Paul. Anybody could go on YouTube and just put in Gerald Celente, Ron Paul, and you'll see the interview with he and I. It's wonderful. Almost about 100,000 people have tuned into it. And his is the Peace and Prosperity Institute. Now is, of course, we do Occupy Peace, bring home the troops, secure the homeland, put the troops to get work, building our rotted infrastructure, and force Congress to vote to go to war, which they have not done since World War II, and we'll tell them how to vote. Blockchain democracy. We could vote online, and they can't hack into it. And it's very difficult to raise any money. We sent out 40,000 to our list of people about me being on Ron Paul and asking people to donate to Occupy Peace, and we raised a grand total of $130. So people aren't concerned about peace, and then when you listen to the politicians and the support the troop mentality and how we have to continue with wars around the world, the American people seem to love war and hate peace.
Gerald, how can people find out more about the Trends Journal?
Oh, simple. Just go to trendsresearch.com, trendsresearch.com. And on trendsresearch.com, there's also the Occupy Peace link, and you can find out more about that as well. So the solution is really very simple. Either donate to peace or keep the killing going. Then people don't realize the future's in their hands, unless they like to look up to cowards, liars, freaks, and fools, who they call politicians. So that's the Trends Journal. The new one's coming out, and it's going to be history before it happens.
Gerald, thanks for being on This Week in Money.
Thank you, Jim, and all the best, and thank you for all that you do.
My guest has been Gerald Celente, publisher of the Trends Journal, online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Ted Dixon, next on This Week in Money.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
Oh, it's great to be back, Jim.
Just to brag you up a little bit here, last year at this time, you said perhaps you might want to invest in packaging companies because with all the online trading, or not trading, but buying going on, especially for Christmas, that packaging would do very well. And at Christmas time, the city of Vancouver said it had so much cardboard turned into its recycling plant, it didn't know what to do.
Right, and we did see a number of sort of paper packaging companies have a pretty good 6 months in last year in the first half, and then that trade kind of ran out of steam. But certainly, the companies like Winpack and Cascades, which are into providing those kinds of materials, did very well. And maybe that theme has kind of been digested by the market, and now we're into kind of a whole new world here with a new Fed chair coming on, and had 1 year of Donald Trump as president, and people are focusing on what's next, I think, for interest rates, and whether the U.S. market in particular can keep on humming.
To start off the year, though, Canadian equities have not done well. The U.S. equity market continues to grow by leaps and bounds. Why the difference?
Well, it has been a disappointing start to the year for Canadian equities. The mid-cap-oriented Inc. Canadian Insider Index, including dividends, is down slightly, maybe 30 basis points. But the TSX is down even more. The TSX is down, including dividends, about 1.4%. So, the insider stocks continue to outperform the broad Canadian market. That's the good news. The bad news is both haven't returned positive numbers yet so far this year, which is a bit surprising, in terms of, certainly relative valuations. The Canadian market is, we took a look at the relative valuations between the two markets, the Canadian market and the U.S. market, and there's some big gaps there. For example, on a PE basis, the average stock in Canada is at about 21, whereas in the U.S. is about 25. Now, both of those are very elevated by historical standards, but the U.S. is even more stretched, and it continues to get even more lofty in terms of valuation. So we expect that gap will close. The big question will be whether it'll be U.S. stocks coming down or whether Canadian stocks finally get a bid as global commodity prices show some pretty robust signs here. Now, unfortunately in Canada, Jim, the Canadian crude prices have not followed the global crude prices higher. People can track, Canadian crude prices on CanadianInsider.com via the Canadian crude ETF index, symbol CCX, which looks at some near-dated Western Canada select pricing. So it's a good ETF to follow in terms of what's happening for Canadian producers. And unfortunately, in the past 3 months, that ETF is down 8%, reflecting pretty low pricing power of Canadian crude producers compared to those in the rest of the world. So that's one reason why the Canadian market has been lagging the U.S. Until Canadian crude can find a bottom. It'll be hard for Canadian market in general to close that gap. But eventually, if crude prices stay strong globally, Canadian crude should be able to find a bottom here, and we should be able to start closing that gap with the U.S. market.
It's one of the reasons why Canadian equities are not doing all that well to start off the year, the uncertainty about NAFTA.
Well, I think that was part of it. That's got to be a factor with among a number of trade sensitive stocks, and I would think that if that NAFTA situation was resolved, that would help in closing that valuation gap. Probably international investors are a little worried about what the implications are, and that's could be one consideration in global fund managers, putting their Canadian ideas just on the shelf until the NAFTA situation becomes a little clearer. So I think for sure that's one of the factors in this valuation gap that you're seeing.
Should Canada be optimistic about a decent settlement if NAFTA is renegotiated?
Well, we'll have to see how it plays out. The developments in January have been somewhat favorable to Canada, but they're still talking. And we had a reversal with the Bombardier tariffs from the U.S. International Trade Commission. So there's been some positive signs, but no victory laps yet. And the TPP move was a good move, but international investors haven't quite given us any credit for that. But we'll see. We'll see over time. If Canada is able to cut a deal on NAFTA, we're in the TPP. That should bode well, for the medium term. But look, the elephant in the room is certainly NAFTA at this point.
Something like 36 Republican governors sent a letter to President Trump urging him not to rip up NAFTA, that they think it's a pretty good deal for their states.
Well, sure, but there's a number of considerations in this, and in all these trade deals, you've got vested interest pulling and tugging. And just look at the softwood lumber dispute. You've got the home builders who are siding with the Canadians, but you've got the landowners who seem to have the ear of the administration, and not just this administration. The Obama administration as well, was heading down this path. So you've got some pretty entrenched interests at play in these trade talks, and it's very hard to kind of assess who's on top at any given time. Let's not kid ourselves. This is not about free trade. This is about managed trade. And when you're talking about managed trade, you've got all these lobby groups, invested interest groups, trying to curry favor with the negotiating teams and to get ahead. So the outcome will be as much determined by I think political agendas in the United States as they are what's good for the United States. You just look at the softwood lumber dispute. Is it good that lumber is trading at multi-year highs for American consumers? No, it's terrible. But it's great for a few lumber companies in the United States, and they're the big winners. And so we'll just have to see who ends up as the big winners as NAFTA unfolds. And we still don't know yet what the bottom line is going to be. But it's been encouraging, but not enough to get a bid under Canadian stocks. We've got to get a lot more progress done before I think that valuation gap's going to close.
It's very unlikely that the BC NDP caucus will be singing Solidarity Forever with the Alberta NDP caucus, because they're battling it out over the pipeline that's proposed, well, not just proposed, approved of by the federal government between Edmonton and Burnaby.
No, I think the BC NDP are singing Solidarity Forever with the BC Green Party, well, at least for now. So, John Horgan, has to keep his coalition partner happy, at least for now. And so we've got these kind of strategies that we saw this week. The NDP have to demonstrate to the Greens that they are trying to stop this pipeline. Whether they can or not, is another story. I've seen mixed media reports in terms of where the BC government really is on these regulations that they're talking about. So, on balance, I gotta believe, Jim, that this is more political posturing internally in British Columbia. The NDP have the reality is they've got to deal with the Green Party. It's kind of forcing their hand on Kinder Morgan. And I don't think it's a winning hand for them either in terms of, their ability to actually stop it. And if push comes to shove, it could make them vulnerable outside of Lower Mainland, in the next election. Once you get outside of Lower Mainland, you've got a completely different take on the Kinder Morgan situation. It's not, but in the Lower Mainland, you've got more. You've got a vocal group that are quite opposed to it. But as you get further into the interior, the public's mood changes quite a bit.
Well, they're looking at all the pipeline jobs, and also what about the jobs at the port once they start shipping it?
Well, that's right, and you do have this issue of investor confidence. So it's I really think the BC NDP are in an awkward situation, and we'll just have to see how willing they are to push the envelope here. We'll have to see how this plays out. Certainly, a trade war with Alberta is not something I think the NDP want to have happen, because it could be quite damaging and to the local economy and politically. Alberta could. I'm not an expert in terms of what Alberta could do in terms of internal, in terms of trade retaliation. But I believe they have some significant levers that they could play that would impact people's, could impact their daily lives here in British Columbia if they really wanted to. So, I don't think it's going to get to that, though.
Taking a look at some traditional things that Vancouver has done well, the mining industry, gold mining especially, how's that sector looking?
Well, the gold mining industry and the mining industry is looking pretty upbeat, I think. It's been overshadowed by a lot of the hype around cryptocurrencies and marijuana stocks. But slowly but surely, commodity prices are rebounding. They're generally at multi-year highs. This is and they don't show any signs of reversing at this point. It's not going up in the straight parabolic line, parabolic curve like we've seen on cryptocurrencies and to some extent the U.S. stock market. They're just pushing higher, and so that's giving companies time to build out their properties and raise up some money. So the resource industry is the mining industry is looking pretty good right now. The traditional mining industry. So provided we continue to see strength in underlying commodity prices, then the mining industry here on pullbacks, is probably presents some decent buying opportunities, compared to some of the overhyped areas of the market that we've seen. And I would include in that the general U.S. stock market, which at this point I think people are really assuming a lot of good news is going to keep flowing, and they've discounted any potential bad news.
Ted, thank you so much for being on This Week in Money.
Thanks for having me.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Ted Dixon. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.